So today, Jeremy, we're going to talk about 100% loans, 100% financing.
Yeah.
Whether it's USDA, 100% FHA, or whatever's going on out there.
Yeah.
And I get a lot of clients that they call me. It's like, I want to apply to one of those 100% loan because I don't have any money to purchase right now. And in reality, you do need some money, right? You're going to need money for the escrow deposit. You're going to need for the appraiser. You're going to need money for the inspection.
Yeah.
What are some of the programs out there that work that way? I know you mentioned before USDA.
Correct. Yeah.
What are the others that you have?
Well, they do have some, the VA program that you can have 100% financing as well, right? That's, whenever you're purchasing a home, you have your down payment and then you have your closing costs, right? So closing costs consist of fees from the lender, consist of taxes and insurance, upfront payments whenever you're purchasing a house, right? Those things are not covered with the 100% financing. Again, because the 100% financing, they're just financing the home, not the extra stuff on the closing costs.
So you're saying that I need some money.
100%, but there are ways where, we haven't touched on seller concessions.
Correct.
But if the seller gives you enough seller credits or seller concessions, that could potentially cover the closing costs for you. So there are times where you can go into a home with no money. But I say those are unicorns where you're getting a great deal on the home and the seller is feeling graceful enough to give you enough seller concessions to cover that.
All that money.
Right.
It's Christmas.
Yeah.
And when I sit with clients, who want to sell their house, I say, well, I always mention that that's a great tool to make your house more attractive than the competition. It's concessions. Another great tool is if you have one of those loans with a lower mortgage rate, and it's an assumable, right, mortgage, it's a great tool to use because basically you are telling the buyer, listen, if you do qualify to assume my mortgage, your rate is going to be 3%. Yeah. And unfortunately, we know now it's not 3% anymore. It's like 6, 7, or whatever. But it's tools that we have that we use in the market to help clients sell their property. You have to be creative. You got to think outside the box. Yeah. A lot of realtors think I'm just going to take some nice pictures. I'm going to put the property on the MLS, and that's going to no. You got to think outside the box. Now, we mentioned 100%, right? We talk about on a different video. We talk about down payment assistance, right? When it comes to investors, we mentioned before, like the DSR, right? That looks at actually the property. Talk to the audience. How does this DSCR work?
Yeah, so DSCR stands for Debt Service Coverage Ratio. So it's a mouthful, right? But essentially, what we're doing when a client's using that program to buy a house, I'm not requesting any income document. As the lender, they're qualifying the home more than the buyer themselves. Okay. Because for them, they want to make sure that the home is generating enough rental income to cover your mortgage. And I like this because you have someone else on your team, essentially. Because the lender is not going to give you the money for the house unless they know, because they're going to do their own due diligence, unless they know that the home is profitable, that you're going to be generating more income than the mortgage itself, right? So I always say you have an expert backing you when you're looking at these houses because they're going to run their own rental analysis, market analysis, make sure the home is priced well, and again, it's generating enough income. So again, the DSCR loans are a great tool for someone self-employed that doesn't report much in the tax returns or just has a ton of money saved that can't qualify for traditional finance. Now, one of the big factors with DSCR loans, and keep in mind, every lender has different guidelines, right? They may be slightly different, but a huge factor is credit score. They want to make sure you have a good credit score, right? Usually, I would say for these products, 720 FICO plus is usually ideal. There are rare cases where, they could work on getting you qualified with lower credit score, but usually you need a good credit score and enough money for the down payment because down payments are usually 20-25% down. Correct. And interest rates are slightly higher, right? Because it's a more risky loan.
Yeah, so the higher the risk, the higher the rates.
Correct, yeah.
Okay, yeah, makes sense. Another thing is you see a lot of people who are thinking, well, okay, so I wanted to have a roof over my head, but I'm also thinking about investing in real estate and starting creating that portfolio. and they have no idea that they can actually do it with an FHA loan.
Yeah.
How will that work?
So you could utilize an FHA loan, and there's something in the real estate world called house hacking, right? So house hacking is essentially when someone buys a single family or a multifamily, because with an FHA loan, you could buy a multifamily up to 4 units, right? Putting 3.5% down. There are loan limits to FHA depending on the counties and depending how many units. But again, you could utilize that tool. And I always tell people, if you're living with your parents and you have some money saved to buy a house, but you're like, you know, I don't want to spend my whole paycheck on the mortgage.
Yes.
Because with interest rates, taxes, and insurance, you know, mortgages are slightly higher than it was before. You could buy a single family home and even rent out the other rooms to roommates, to your friends, and you're probably paying 30% of your mortgage, and you're still, you know, saving and racking up money during that time. Or if you could find a good multifamily, which, you know, if you see it online, people are saying, hey, you know, get an FHA loan, buy a multifamily, rent it out. It sounds easier than it is, right? Because coming across a good multifamily deal now is a little difficult. Correct. You got to do some digging or some TLC on those homes. But again, yeah, you could utilize an FHA, and I think that is a great tool to start your real estate journey. And again, that's low down payment. Interest rates are slightly lower, and it just gets your foot in the door.
So there you go. Like we mentioned before, where there's a will, there's a way. So if you're thinking about, you know, also I need a place to live, but I also want to start investing, we have the tools, you know, we have the professionals here to guide you through the entire process. If you want to sit with us for a free consultation, you can call me at 407-361-7454, or Jeremy.
Contact me at 407-744-8326.
Thank you.
Thank you, guys.